Good afternoon, everyone. Thank you for joining us. Good afternoon, Dolapo. I'm not sure if you can hear me. Mr. Dolapo Miduri.
Hi, good afternoon.
Hi, good afternoon. Thank you for joining us today.
Thank you. Sorry for the delay.
That's fine. Good afternoon, everyone. We'll just wait till 2 on the dot and then we kickstart. Thank you for joining early. We'll just wait till it's 2, which is in about 3 minutes.
Hello, good afternoon, everyone. Thank you for joining. I think we'll just give it about 2 to 3 minutes for more people to join the session before we proceed. Thank you for taking the time out to join us today. Really appreciate it.
Thank you, Tali.
All right, good afternoon, everyone. Thank you for taking the time out to join us this afternoon for another edition of the Mixed Invest webinar. The title of today's webinar is Opportunities and Risks, Investing in Real Estate in Nigeria in Challenging Economic Times. Before I start, I'll just give you a brief background of Mixed Africa. Mixed Africa is the foremost African real estate and infrastructure development company with operations in 5 countries in Africa and projects in 8. We pride ourselves on leading the transformation of African cities through building of sustainable communities. With over 15 years of operation, we have a land bank of 15 million square meters and have delivered over 16,000 real estate and commercial units since then. Our track record speaks for itself. We have successfully created innovative solutions that have helped create easy and accessibility to home ownership for the average Nigerian, with solutions such as Mixed Flex, which is a mortgage scheme, and recently Dual, which is our rent-to-own scheme. We continue to make efforts to reduce the housing deficit and reduce the affordability gap of home ownership in Africa. It's one of the heels of this that we continue to organize sessions that help Nigerians and Africans, both at home and abroad, to determine how best to invest in real estate here in our homeland. So for those joining us for the first time who are not familiar with the Mixed Invest brand, Mixed Invest is Mixed Africa's diaspora engagement platform that was deployed with the objective of creating a relevant investment experience for Nigerians in the diaspora seeking real estate investment opportunities back home. So we execute this through roadshows, events, improving transaction process for those abroad, creating dedicated communication channels, preferring relevant investment tips and information to those abroad. So that's just a brief summary of what the Mixed Invest platform is. Today's session promises to be very insightful and engaging as we have very well-established professionals that are part of the panel. Before I introduce our panelists and our moderator today, I'll just quickly run through the agenda for today and also share some house rules. So the agenda today is we're going to start with the panel session, which will be moderated by the head of marketing, Onome Mukuro. And after that, we'll have a session for Q&A. Then we'll have a quick closing remark. Quick house rules. So we'd like for all our panelists today to have their videos on, especially while they're talking, so it can be more interactive and engaging for our lovely audience here today. Secondly, if you have any questions during or after the panel session, would like for you to just post it in the Q&A box, and during the Q&A sessions, they'll be answered by a panelist or a any member from our member of our management team. So without further ado, I'll be introducing our moderator today. Once again, she is the head of marketing and Mixed Africa, Onome Mukuro. Over to you.
Thank you very much, Tade. Good afternoon, everyone, and thank you for joining us today. We're very grateful to have you and to have you take out time to join this session today. Like Tadi has already introduced, Mixed Invest and Mixed Africa, so I won't dwell a lot on that. My name is Onome Mukuro, as has been introduced by Tadi, and I am privileged to be your moderator for today's session on opportunity and risk, talking about investing in Nigerian real estate in challenging and economic times. I'm also very excited to have with me 3 industry experts renowned for their work over the years, and I am very eager to learn from them today, and I'm sure you are as well. To kickstart the introduction, I'll begin with the economic powerhouse herself, and right now the only lady on the panel, Ms. Chinwe Egwim. Chinwe Egwim is a renowned economist with over 700 published economic notes under her belt. She is currently the chief economist and head of economic research and intelligence at Coronation Merchant Bank. She has held strategic roles in reputable organizations such as FBN Quest Merchant Bank, FBN Capital, Fitch Ratings Milan, and the Central Bank of Nigeria. Hi, Chinwe, welcome today. Thank you for joining us.
Thanks for having me.
Thank you. So I'm going to go this route. I'm not going to just read everything that we have on your bio. We have a lot that you've achieved, but I would want you to introduce yourself as well so that we can hear from the horse's mouth, so to speak, on the things that you've done and what you currently do.
I think you already did a good job with that brief introduction, but yeah, I'm an economist. I have over 700 published economic notes. Outside my core work as an economist, I'm also well positioned in gender advocacy. And so I've sat on, I've held influential roles in select organizations that push for better female representation. I've also served as a national consultant for the UN Economic Commission for Africa. So that is tilting towards more policy advocacy. But as you said, if I keep going, like we're going to consume so much time. So
yes, thank you so much. A powerhouse indeed. I'm excited and I can't wait to learn. Up next is someone I consider the ultimate Nigerian delegate in the UK. This man has hosted presidents, he's hosted governors, ambassadors, and so many important personalities, and he's still very humble and down to earth. Mr. Yemi Edun, welcome, and thank you for joining us today. I'm going to do a brief introduction, and then I'll also hand over to him to speak more on himself. Yemi Edun is the founder and CEO of Daniel Ford & Co. and Daniel Ford International. He's also known as a foreman in the real estate sector. His firm grew from a managed portfolio of less than 10 properties to more than 600 in central London alone. Yemi is also a qualified financial advisor, and over the years, his firm has become one of London's leading property acquisition consultancies. Welcome, Yemi. Thank you for joining us today. Please tell us a bit more about yourself so that the audience can learn from you.
Thank you. Thank you, everyone. Name is Yemi Edun. The company is Daniel Ford International. We are based in King's Cross, London, and we are the foremost real estate firm independent real estate firm owned by a Black origin person. We've been trading for over 25 years, and the brand and name is well recognized and respected. Thank you.
Thank you very much. Again, very excited to have you. And finally, last but not least, a seasoned real estate professional and investment advisor, Mr. Dolapo Onidiri. Dolapo, thank you for joining us.
Thank you very much, Onome. Good afternoon.
Good afternoon. So I'm just going to do again, as per the other two panelists, a small introduction, and I'll leave you to complete it, so to speak. Dolapo is the CEO of Estate Intel, in charge of providing data and research to support real estate investors in their decision-making process. Dolapo has also spent over a year at Access Massad Investments, managing a real estate portfolio. I'm going to stop here so that he can speak more on himself, and then we can go ahead.
Thank you. I mean, there's not much more to add. We've got very excellent people here. I'm very pleased to be here. But essentially what I do at Estate Intel is provide market research to people and businesses who are trying to invest in the real estate market. So I think one of the problems that we can all point to when we look at the property space is the lack of really concrete, accurate data. So that's the space that we're trying to fill to ensure that people who want to put money into the real estate market can actually make those decisions with conviction. So yeah, thank you.
Thank you again. Thank you so much to everyone for joining us. I'm sure that everyone is really looking forward to learning. So without wasting much time, I'll go straight into it. Just before I go ahead, please note that you can put in your questions in the Q&A section. And of course, after the session, we're going to be sending recordings of the webinar to everyone. So if you miss some parts or you can't stay through everything, we'll definitely send you recordings as long as you registered. Okay, so now I go to my panelists. Again, thank you for joining us. I will start with Chinwe. Now, we all know that the economy is in a seemingly bad state. I mean, with fluctuating exchange rates, rising inflation, cost of goods and more. But sometimes we wonder, are we perhaps exaggerating? Maybe it's not as bad as we think, or maybe we're not even emphasizing it enough. So my question to you, Chinwe, as the economist here is, what is the current state? What's the actual state of the Nigerian economy? And especially with the election year approaching, what would you say is our actual reality?
Thank you so much, Onome, for that question. It's a really good question. So I'm going to kick off by highlighting select macroeconomic indicators, and then I will share a forward-thinking view for each of them. And so the first is GDP, which to an extent should check the temperature of any economy, right? Now, similar to other countries across the globe, Nigeria has been impacted by global economic shocks, such as the coronavirus, which we saw peak in 2020, and of course, the recent Russia-Ukraine crisis. GDP growth has been somewhat healthy. The latest national accounts released by the National Bureau of Statistics shows that the economy grew by about 3.1% in the first quarter of this year. However, this is compared to 3.9% that was reported in the previous quarter of last year. And the reason I say that it is somewhat healthy is because the last time we saw annual GDP growth at these levels, that is above 3%, was in 2014. However, when we consider the estimated population growth rate, which is at 3%, one can look at this growth rate as weak. And the target should be at least double what is currently obtainable. The expansion recorded in the first quarter of this year can be partly attributed to steady growth in the non-oil economy and also positive base effects. We saw a 6.1% growth for non-oil in the first quarter of this year, and the key drivers were finance and insurance, telecommunications, manufacturing, real estate, construction, agriculture, and combined, these sectors that I have just mentioned accounted for 76% of total real GDP. Now, looking ahead, we expect growth at 3.4% year on year for this year, for 2022. And for this forecast, what we did was to consider stable oil prices above $80 per barrel in the short term, sustained growth in major sectors, electioneering, which typically stimulates demand on the back of increased Naira circulation, and a small fiscal boost due to NGR activities, among others. Regarding sectoral growth, we note that the steady financial injections or interventions into select sectors such as agriculture, manufacturing, and health by the central bank have assisted with keeping the economy afloat to an extent. However, we are likely to see the trickle-down effect of the Russia-Ukraine crisis on consumer demand and economic activity. We have assumed a moderation in the output levels, mirroring the impact of this ongoing Russia-Ukraine crisis for the second quarter of this year. So basically, when you look at historicals, in the first quarter of each year in Nigeria, you'd find that the growth rate is actually the weakest. And then there's some kind of boost or uptick you see in Q2, but based on our model, we're not expecting a significant boost in Q2, just a very moderate growth. And this is really reflecting or mirroring the impact of what we're seeing in the global economy that's trickling down across all the economies across the globe. So for subsequent quarters, which is Q3 and Q4, our assumption points towards increased output volumes driven by harvest and regular seasonal effects. Now, moving on to the exchange rates and external reserves. Year to date, gross official reserves has declined by 3.3% to close at about $39.2 billion. And barring any outflow or large outflows, we see reserves at plus minus $38 billion at the end of this year. And this is considered a healthy buffer and sufficient to defend the Naira at current levels, but with room for potential depreciation. Now, year to date, the Naira has depreciated by close to 2% to close at 430 Naira per USD in the NAFEX window, not the parallel market, NAFEX window. And for this window, we see the FX rates at 434 Naira per USD by the end of this year. Our forward-thinking view on exchange rates takes into consideration accretion of reserves via all receipts, or production capacity adversely affecting FX receipts, despite what we're seeing with oil prices, that's higher oil prices, weak portfolio investment inflow on the back of negative real returns. So that is your yields versus inflation, possibility of little or no injections by the CBN into the IME window by the end of this year. And this is really on the back of the policy that's tagged RT200. And now the situation in the parallel market is visibly different. And I will touch on that very briefly. There has been steady depreciation in the parallel market, largely due to demand pressure. We've seen a recent appreciation with the Naira at 660 Naira per USD at some point, from a high of 710 Naira. We suspect that speculative demand will heighten as electioneering kicks off proper in September. In our view, we see a range of between 660 to 730 Naira per USD, at least till mid-October. Currently, the Naira is around 675 per USD in the parallel market, and that's based on our channel checks. Now, the next indicator is inflation. Again, rising inflation is not unique to Nigeria, particularly this year. Both advanced and emerging economies are struggling with combating high inflation rates triggered by supply side shocks. However, it is worth highlighting that prior to the ongoing Russia-Ukraine crisis and the economic shock on the back of the COVID-19 pandemic, Nigeria's inflation had been at double digit for at least 4 years. And structural issues impact the inflation trend in Nigeria as cost-push inflation continues to drive inflationary pressure. Yesterday, we received the latest inflation report. It came in at 19.6%, and this was in line with our forecast. Inflationary pressure is still partly driven by challenges such as high energy prices, supply chain disruptions, limited market access, and security challenges. For specific products, over the past year, FX depreciation in the parallel market has also contributed to price hikes. And this, we must remember, Nigeria is a heavily import-dependent country. And so activities in the FX market do impact price of goods in our domestic market. So what does this really mean? Higher inflation rates points towards higher negative real returns. So using the 1 year Treasury bill, that is currently about minus 12.8%. Weaker demand for non-essential products as inflationary pressure weighs heavy on consumer pockets. And then thirdly, there will be some increased appetite for investments that hedge against inflation. Real estate investments do fall under this category, given the asset's ability to appreciate over time. Now, looking ahead, inflation is expected to trend upwards in 2022. This is on the back of structural issues impacting the cost of doing business, such as insecurity, the trickle-down effect of the ongoing crisis between Russia and Ukraine. Furthermore, prices of commodities, notably wheat, have risen. And given the importance of a product like wheat as an input for staples such as bread, pasta, the price surge has had an adverse effect on imported food prices and food inflation, which has been the key driver for the headline inflation for several months. Other drivers of our assumption include a modest exchange rate depreciation, which I've mentioned already, impact of the hike in electricity, and of course, PMS prices as well. So we see headline inflation hitting 22% at the end of this year. Now, the next and final indicator I'm going to speak on is the policy rate. In an attempt to tame rising inflation, different central banks have embarked on monetary policy tightening, including Nigeria. The Federal Open Market Committee in the US has tightened the Fed funds rate 4 times this year. And the real estate sector is negatively affected by rate hikes as mortgage rates rise, and REITs, which are real estate investment trusts, have to pay more to borrow capital. In Africa, we have seen rate hikes in Ghana, Egypt, South Africa, and Kenya, and of course, Nigeria as well. Considering the persistent rise in inflation, we expect another rate hike by Nigeria's Monetary Policy Committee before the end of this year. And this is largely due to the committee's resolve to restore price stability while providing necessary support to the economy. So we see the policy rates, we see another hike by the end of this year. The next meeting is in September, and then they would have one in November before they close out for the year. Now, let me just mention that as at June, and this is the most recent data, is somewhat lagged, but as at June, prime and maximum lending rates were 12.9% and 27.6% respectively. And this is versus 11.9% and 27.3% for these borrowing rates I just mentioned in the previous month. It is possible to see an upward trend in borrowing costs. So let me stop there.
Thank you so much, Chinwe. That is extremely insightful. I feel like we've just been read a summary of the entire economic status of Nigeria at the moment. So, and it's quite enlightening, some of the things that have been mentioned. But the next question will go to Dolapo on the heels of some of the things that Chinwe has raised. So she has said that real estate, will, do well in terms of the way that it appreciates. However, mortgage rates are also increasing. So what would you say is the status of the real estate sector in Nigeria and, in relation to the performance of the economy, Dolapo?
Thank you, and thank you very much, Chinwe, for the really detailed account of how things are going. I think very, very accurate. When it comes to the real estate market specifically, I think there are different ways to look at it. If we look at the middle income and the affordable housing segment, there is there's a very big deficit, and there's quite a lot of demand in that space. Even though there is demand right now because of the state of the economy, the way the Naira has been fluctuating against the dollar, and the increased inflation that we're seeing, construction costs have risen, and they're consistently rising, and it's putting a lot of pressure on developers who are still trying to execute and deliver high quality or decent product at good prices for people in that affordable and middle income segments to afford. Now, what is expected to happen, or what we're already seeing happen, is people starting to adjust their prices upwards to account for this difference in construction costs, so that at least they can remain somewhat profitable. I do think it's going to have an impact on the buyers, mainly or also because quite a lot of properties are actually sold off plan. That also makes it really difficult when you're trying to deliver multiple projects. Unfortunately, the less institutional developers who are much smaller and they don't have scale, they don't have warehouses to stock stuff for 2-3 years as they go along, they're going to have to go back to their buyers and ask for, oh, please, I need more money. This project is not going to be able to finish unless we collect some more money. The more institutional players will probably be able to take that shock because they have the benefit of financing, or they have a larger structure. But what I just see, or what we have been seeing rather, is that there is demand for real estate, especially in the affordable and middle income segment, actually where Mixed does play. However, the construction costs are really putting pressure on developers to increase prices, and obviously that's going to make it harder for buyers to try and get off the property ladder. I think that's what we've really been seeing on the residential segment predominantly.
All right, thank you very much. Actually, on the heels of that, because being a real estate development company ourselves, this is definitely a concern that we have as well. I will ask the next question to you, and I would say, beyond even just the cost of construction, what other challenges do you think are being faced by real estate developers at this time? And I'll also ask that, sorry, Special. I'll also ask that I think we have a member of management on the call to also speak to this as well. So if I may, quickly at this point call in Rolake after Dolapo speaks to also speak on some of the things, the challenges that we are experiencing as real estate developers, considering the economic situation.
Sure. I mean, yeah, I'll go ahead. But of course, I'm looking forward to what Rolake has to say. She's an expert here. But I mean, I think the two things outside construction costs that I'll say is one, just access to financing from the developer side. It's really hard when you want to develop these projects at scale without having to rely on the off-plan off-takers to fund your development. That type of financing is not really available. And when it is available, it's really, really expensive. So you find that the likes of Mixer, the other types are going to the market to raise capital. So I think the main thing that, at least the challenge I would say there, is the increase in rates, which would obviously make it much harder for developers who are trying to fund large projects. I think we can flip that back to the buyer as well. Right now, of course, there's really no access to mortgage in the country. So it means that if anybody is trying to buy a property, they're buying it with cash. Maybe they're paying over a long period and using some of the nice schemes that say has launched recently, like the renting or ETC. But it's a really, it's a cash heavy system that we're running here. And without the access to financing, it really limits the amount of people that can participate. So I think those are probably outside construction costs, which I think is quite notable. The financing on both sides, financing for the developer to be able to deliver projects at scale, and financing to allow the end user actually access the properties and get on the property ladder, is another challenge that the developers are also facing, because it affects the volume of demand that they can see. I mean, over to Rolake for the more super insights.
Thank you very much, Dolapo. So I'm not sure if Rolake is able to attend actually now, but what will happen is I think that I have another member of management, but I don't want to deviate from our full panel and move to management just now. But it's something that I think that we need to address. I would love maybe later on we can have the CFO, who I think is also on this call, speak on it, or the CCO, or I could actually just speak on it later. So I'll just go on to the next question, but I will reiterate that the things you have mentioned are true. Some of the issues that we face as developers is the financing, because most of our products are off plan, construction costs, and also being able to accommodate affordability for our customers. And that's why we try to do create some innovative solutions that can help people afford that. And we can speak on that later. Let me just go back to our questions. So I'm going to go to Yemi now. I have a question for him. Considering what is going on right now in Nigeria, I would say, from your experience, how would you say that the real estate sector has performed in similar economic challenges in other markets? Have you experienced this sort of challenges, say maybe in the UK? And what was the outcome for investors? So here we want to do like a comparison between countries and economies.
Thank you. I don't know, when you say considering what's going on in Nigeria, I dare say what's happening in Nigeria cuts across board. All over the world, there are challenges, but if we want to be specific about the housing sector, the UK historically has identified that there is a shortage of property. So regardless of the crisis of COVID, Brexit, and the Ukrainian war, we've identified that we need to build 300,000 new homes every year. And last year was the first time that, the highest achieved so far was last year, which was 250,000. I don't know the numbers in Nigeria. When there are crises, it creates opportunities. And I know in the UK, we've had a blip in 2001. We had the huge one in 2007, 2008. And we had another one about 3 years ago due to Brexit. And now the Ukraine war. Mainly, the challenge we have is shortage of supply. We have more particular or more obvious problems in regards to energy costs, that is more significant at the moment because energy costs have risen by up to 400%. But in juxtaposing the situation with Nigeria, I think what will happen in the UK whenever there is any crisis is that you tend to see the government react faster. We've seen our interest rates move from 0.25 in December to 1.75 at the moment to try and manage the inflation trend. The challenges we are facing since Brexit is the fact that we have shortage of skilled labor in the housing market. Like I said, demand is very short. So prices have still not subsided despite the huge number of homes that were built last year. So the way I say it is that there are two parts to it. There's the long term and the short term. Long term, I can point to something like the HS2, which is the great infrastructure investments. But this started over 10 years ago, and it's now coming into fruition with the Elizabeth line, which basically opened up West London to Essex and Southeast London, cutting off travel times, which has essentially changed the matrix of location. People are now looking at things like the journey time. And when HS2 is fully implemented, you would have travel time further cut down from cities like Birmingham to London, which would mean that you can live in Birmingham and commute to London on a daily basis, So I know in Lagos there are infrastructure investments as well. I think the red line and I don't know, is the orange line, blue line, So I know things are happening in that regard as well, and that would change where people would buy and where they would live. We have similar challenges. However, the government's policies are dynamic, and I think the impact shows faster in the UK because a difference of £50 in your outgoing goes farther than probably it would in Nigeria. I hope I hope that's thrown some answer to the question.
Yes, thank you so much. From what I gather, what you're saying is that while other economies have experienced what we're currently experiencing or are currently experiencing it, some of the things to then do is to look at other forms of infrastructure that can help the real estate sector. So if, for example, we work on a commute time, it's easier for people to live on the outskirts of Lagos and work in town because commute is easy and faster, and that way maybe affordability can be more accommodated or achieved. Thank you very much, Mr. Yemi, for that. It's very enlightening. I'm going to go to the next question that just says, why or how should the state of the economy influence investment decisions? And this I'm going to throw first to Chinwe. What would you say are the asset classes to consider during this period, considering what we know?
Okay, another good question. So high inflation, potential upticks in borrowing costs, relatively slow growth, and a fluctuating FX rate environment. In a nutshell, these can create an umbrella for the current state of the economy. And some of the projections I shared earlier with you should give some guidance. For example, healthy economic growth trends translate into higher corporate profits, right? And investor risk appetites, which are positively correlated with share prices. I always say that it's best to diversify your investment portfolio. That said, I would say one, consider investing in fixed income instruments, as yields on select investment products within the fixed income market are high when compared with the same in select advanced economies. Stocks, year to date, the NGX All Share Index has posted a positive return of about 16%. Investors can optimize their equity allocations by focusing on quality companies on the basis of their balance sheets and earnings. So due diligence is required. Real estate investments as well. Typically, real estate value tends to rise and even outpace interest rate growth. It also serves as a hedge against rising inflation. Investors can also invest in real estate investment trusts, or REITs. Of course, REITs are trusts that use the pooled capital of many investors to purchase and manage income property and mortgage loans, and they are traded in the NGX, just like the stock. Also, invest in dollar-denominated instruments. Due to exchange rate pressure in the parallel market, currently at 675 Naira per USD, safe haven currencies such as the USD could be used to preserve purchasing power. And this can be achieved by investing in dollar-denominated instruments, example, dollar fixed income funds. So yeah.
Okay, great. Thank you. I think that a lot of people already started the dollar-denominated investments. But yes, this is very enlightening. Dolapo, do you have any other additions for us as an investment specialist yourself? Hi, Dolapo.
Hi, I definitely think I agree with the dollar-denominated investments first. It's a really tough environment out there right now, and as Chinwe said, right now, a lot of Nigerians should be trying to preserve their purchasing power. The way the currency is fluctuating obviously means that our effective income is actually dropping quite rapidly. So dollar-denominated investments, mutual funds, especially the fixed income ones that are dollar-based, the couple out there are a good start. I think looking more long-term, though, you could also still be considering hard real estate, because in the long run, even though there is, fluctuation with the currency, I think we could definitely see one utility from the property investment, but it's as Chinwe mentioned, it's a good hedge for some of the general market shocks. I will say to an extent, when we look at inflation as a hedge for general volatility and inflation, we're not usually considering inflation rates of close to 20%, but I still think that it is an effective hedge to some degree. But definitely dollar-denominated investments as a base, that's definitely the best starting point.
Thank you. I think it's also important to emphasize real estate. I don't think you can ever go wrong with real estate investments as well. So where you can, always invest in real estate. So our next question. Now, I think I'll throw this to Yemi first. What would you say are the investment opportunities available to Nigerians in the diaspora with the economic situation here in Nigeria?
Thank you. Is that question posed to Nigerians in diaspora?
Africans in diaspora, yes.
Vis-a-vis Nigeria or in general?
Vis-a-vis Nigeria. So for Africans in diaspora who are looking to invest back home here, what would you say they should go into?
Well, land is something that, would be an option, apart from the obvious that Chinwe and Dolapo have mentioned, what we've seen, in our engagement with the community here is that what tends to drive investment in Africa, top of the list is actually the emotional purchase, based on nostalgia or trying to resettle loved ones, parents, and all that, So I don't think that will go away. The numbers we are getting now, the figures we're getting now, points to the fact that there are so many Nigerians, or Nigerians top the list of immigrants to the UK outside of the EU in the last 18 months. So in the next 2-3 years, you will start seeing some of these people, plowing back their income back to Nigeria in some form maybe build their own home. But if an institution like Mixter, with your provision and the security negated development is in place, it would be an easy fix for them, you know. Yeah, so land, I think land in Nigeria has done well over time, especially prime lands, you know, and we should remember that the land bank itself is being, you know, fast depreciating, you know, and the fewer available, the more expensive it gets, and people tend to want to live in particular areas. So I think top on the list, and the easier one to get to will be land, then property, stock, you know. I think those are the obvious ones.
Thank you very much, Yemi. And it's interesting that you mentioned land, because I was just going to say that considering the fluctuation in construction costs and all of that, isn't it just easier to buy land and keep and invest in land over, you know, off-land homes and the rest? But I mean, it also depends on your budget and what it is that you can accommodate. Chinwe, I will also ask you this question. I know you've mentioned some of the things that we can invest in as Nigerians in Nigeria, but what about people in diaspora who are looking to come to Nigeria? Would you say the same things that you've mentioned are still viable, or would there be some that will be prioritized over the others?
Okay, so apart from the earlier mentioned asset classes, I would say from my vantage point, now is a good time to pay attention to businesses that are operating in sectors regarded as green shoots. So agriculture, technology, select segments under your manufacturing sector. And you can also consider businesses within emerging green shoots, like those within the creative industry. The current macroeconomic environment has brought with it a need for businesses to boost working capital financing, as operational costs are incredibly high. Now, given the current stretch in spending capacity, so that is in naira terms for those in the diaspora community. And by the way, this boost to spending capacity I'm referring to is really on the back of the current exchange rates. Perhaps equity investments and/or debt financing for reputable SMEs could be considered. Of course, proper due diligence must be adopted if you're going to adopt that approach. Another area worth highlighting is that the FGN, that's the federal government of Nigeria, recently redeemed a $300 million diaspora bond. And in the event that the federal government of Nigeria issues a fresh bond similar to this, this could serve as a good investment opportunity for those currently in the diaspora.
Thank you very much. Okay, so I'll fast go, I think we're maybe running out of time a little. So I'll just quickly go through a few of our other questions. Please, again, don't forget to put in your questions in the question and answer box, and we'll be taking them as soon as the panel session is done. So my next question will go to Dolakbo. What are the risks and challenges of investing in real estate in a high inflation and exchange rate volatility environment? From your expertise, what would you say the risks are? I know you've mentioned these earlier, but would there be a few more that you might want to highlight? And how do you think we can mitigate against them, both as developers and as customers looking to invest, especially from diaspora?
I mean, I think you've mentioned the risks themselves. The main thing, or the main result of those risks is just essentially having an underperforming asset. So by the time you buy the land, and then when you compare the performance of other asset classes after a year, after 2 or 3 years, maybe even 5 years, you see that if I kept my assets in FX, I would have probably had more money. But I think there are layers to that conversation, and it's one that a lot of people who don't want to invest in real estate always throw back at you. And I think I wanted to say this actually when you had mentioned what can people in diaspora invest in. I think when we're looking at places for you to buy land, especially or buy small developments, bite-sized 1 bed, 2 beds, just to relocate family, as Yemi mentioned. What we need to look at is developers that have track record, especially the institutional ones, that can provide you the guarantee that, okay, as I'm investing my money into this land or this property or this scheme, I'm sure that it's going to stand the test of time and it's going to last. It's not just a new company. I mean, there's nothing wrong with new companies, but it's not just a new scheme that, okay, they're just trying to dispose of some land near the Ekpe or near the free zone or something like that. You're looking for companies with track record that have executed similar developments and have the staying power, because by the time you're investing in real estate in the long term, you will be able to weather those storms of FX and inflation to a better degree than you would in the short term. So finding the right development partner or finding the right company with assets and products that you can invest in is probably the more important thing that you should be trying to do when you're looking to mitigate those risks. I think if you're looking to invest in real estate, definitely look to the long term. You can't trade it. I mean, it takes a lot more work, but buy it and keep it in view that I'm going to hold this for 5, 10 years and much, much more. By the time you do that, and you're also partnering with a good company that, like I said, has track record and has turned over multiple projects, and you quickly see that the value is going to be there in the long run. And projects and developers like that usually have projects that can perform well over time. So that's a really good, I mean, I hope now it's sounding like I'm doing marketing for Big Star, but I'm just saying that.
I was just going to add to that and say, you're really talking about Mixed Star.
I think, yeah, just trying to find a partner that you can, a development company that has that track record. It goes, I promise, it goes such a long way to mitigate those risks. Yeah.
It does. And I'm going to just chip in here as well and complete your marketing that you started for us already. Like Tadi had said, we have a track record of about 20 years that we have been in real estate. And so, what better company than Mixed Star? And we've worked in several countries across Africa. You're sure that your money is safe, your investment is safe, and we'll forever communicate with you as when due. Yemi, do you have anything to add? I mean, as someone in diaspora, you probably get people talk to you about concerns that they may have about investing in Nigeria, especially in this climate, right? And like Dolapo said, I think it's an excuse that people who just want to find an excuse always come up with. But what are the things that you'd say people come up with, and how do you best answer them in terms of investing in real estate back home in Nigeria or Africa?
Yeah, I pointed out earlier that, there's something about Nigeria for anyone that's lived in Nigeria before, regardless of their experience, they still have something that draws them back. I think it's an opportunity for organizations like Mixed Star to up your game as well, so that it's not just about the structure, the maintenance of it, the communal area, the infrastructure, the lighting, the environmental friendly, and things like that, eco-friendly stuff, so that, and they are sure that their money is not at risk. That's a key, for all the schemes we've been involved in. And we speak to people, they just don't want to lose money. They want to be sure, and they don't want the next man to know their business. That's why they are dealing with an institution, because it will take them back to depending on family or friends if they have to do it themselves. I think a lot can be achieved in that area. Then when we scale it to a level, I can see in the near future that non-Nigerians would even invest in Nigeria. It might even be things like the beach resorts, and holiday resorts and all that, we all know that real estate itself is a long-term investment, and over time, it would do well. Imagine buying a property even in, I don't know, in Surulere or Oniru, 20, 30 years ago, what it's what today, and that's what we have to keep drumming home to the investors. People want to buy, and as bad as the naira is in terms of devaluation, it gives people in the diaspora, their money is getting more, it's going further, because the properties or the properties are not increasing, vis-a-vis the devaluation of the naira. So what was going, naira at the point was about 450. Now it's hovering around 800, So people in diaspora, I think this is an opportunity for them to be able to buy something in Nigeria, but you guys have to step up as well and give them what they would expect.
Thank you, Yemi. We definitely are doing that. And towards the end, I'm going to have someone in management come to speak on that. I saw Chinwe raise an eyebrow when you mentioned 800 naira as the dollar. I think that
I didn't say dollar. I said naira
to dollar, yes.
400 to 800.
I think because
I'm thinking GBP. I know you think dollars, but I am thinking GBP.
Okay, yes. So Chinwe, I think I will, push this question to you as well as the economist. What are so we know the risk, or some risks have been, some benefits have been highlighted. But as the economist, would you say that the risks, what are the risks? And would you say that the risks are, insurmountable compared to the benefits that come with investing in real estate at this time?
So to be very honest, my co-speakers actually did a good job in responding. So my response will be repetitive. But I'll just say that the risks that were mentioned, especially those attached to inflation and then the exchange rates, are likely to be offset by long-term advantages such as expected increase in real estate value. Obviously, the position one should take is more medium to long-term, and potential increase in rental income. And again, let me just emphasize that real estate is a safe hedge against rising inflation. So that is all I will add to that.
Okay, thank you very much. So I think we've come to the end, but just to round up, I'm going to ask the last question, which again, I think you've all answered, but let's just have it clear and straight for those who are joining us and who may have their concerns. I will start with Yemi, who is actually a Nigerian living in the diaspora. Would you invest your money in Nigeria at this time? And why? It's a simple, straightforward question.
It's not as simple as that,
Okay.
If I have a need, for a property, and I see a good valued property in the right area, this will be the best time to do that, because my pounds will be getting more naira. That's the answer.
Perfect. I think that's well answered. I will go to Chinwe at this time too. So what would be your answer?
Okay. So to answer this question, one has to first understand their risk appetite, and also understand the dynamics around, higher risk, higher returns. Would I invest my money in Nigeria during this period? Yes, I would. But as I said earlier, my investment portfolio always remains diversified, with weightings allocated to each asset class changing as economic conditions change. So I think that now is a good time for me to say that everyone that's on this call should try to stay alert with regards to market insights, research. Everyone can be a research analyst, and this is your pocket that you're, handling. So please make effort to stay in the loop with regards to market insights. Now, I would adopt a cautious investment approach and be keen on risk management. My investment portfolio currently has a mix of equities, fixed income securities, real estate, dollar-denominated investments, and investments via debt financing of SMEs in select sectors. Recently, I've been playing around with the idea of investing in businesses that sell products which cater to lower income bracket in Nigeria. And that is because, that income bracket, they make up 70% of the total population. So, but I'm still in the due diligence stage or phase of that. But I think that's something people on this call should consider. Oh yeah, I would definitely capitalize on the relatively weaker currency, as Yemi said. Overall, my strategy is really on the back of my risk appetite and investment horizon. And just to conclude, because you said this is the last question, just to conclude, I just want to give a quote. My quote, by the way, investment opportunities come and go, and economic downturns provide an opportunity to take your investment game to the next level. So yeah, now is the time to invest.
Thank you very much, Chinwe. I was still going to come back to you again for your final statement, but it's fine. So Dolapo, please, can you give us your answer to this? Would you invest in Nigeria at this time? What would you invest in and why?
Awesome. I think the answer is yes, I'll be investing. I will also actually say I will definitely take a diversified approach because things are quite volatile. I think it's important to make sure that you're, even if you want to take some risk and invest in Nigeria, we need to be aware of the realities of fluctuating prices, the currency weakening, and just to preserve your wealth. I think it's really important to diversify. For real estate, definitely, I will, and it will definitely. What would I be investing in? I mean, outside real estate, maybe startups. Actually, there's a lot of money being raised in that space, and there's a lot of value being created. But on the other hand, for real estate, if you're investing in real estate, I would definitely, as I said before, just attach or find a company with good track record that has executed before. I think being able to find those types of companies, most likely they have good facility management and they have good structures in place to keep the assets longevity and make sure that it can stand the test of time, which is what you need when you're investing in real estate. So I think that would be my position. Yeah, and that's why. So thank you.
Okay, thank you very much. Let me go to the question and answer section now. I think we have a few questions. I will take them. Okay, so the first person has said, Lajide has said she wants a recording. Yes, we will definitely send a recording to everybody. I had mentioned that earlier. As long as you registered, you'll get an email after the session. Beatrice has asked, I have a burning question. Is it possible to partner with other real estate agents here in Nigeria? What's the minimum pay? Please and thank you. If Beatrice is on the call, I'd like to ask her to unmute herself and ask this question because I'm not very clear on it. I don't know if Beatrice is still on the call. Is she asking if she wants to be an agent for the company? I'm not sure. Okay, so Beatrice isn't on the call. I will skip that question because I think that's general for Mixter. Again, another Mixter question. With the prices of homes going up with Mixter, is Mixter going to extend payment plan options from 18 months to 24 to 36 months? I have my management on the call, so I will ask that one of them please answer this question. I know Mrs. Hughes is on the call. I know that Mr. Benson is on the call. If I could just ask that Mrs. Hughes unmute herself, or Mr. Benson, and please just answer this question. Hello, Mr. Benson, Mrs. Hughes.
Can you hear me?
Yes, good afternoon, sir. Thank you for joining us.
Okay, hi, good afternoon. I think I'm going to, good afternoon, everyone. I have listened intently to the conversations, and I agree with most of the things that Dolapo, Yemi, and Chinwe have said. So I think the one I agree with most is the one that says that you should invest in a Mr. product. That's the advice that was most important of all the advice. You should invest in a Mr. product, especially if you buy land, it's going to appreciate in value, and land is in good locations. But to answer the question about the payment plan extension, I think it's a difficult question right now, given it's a difficult decision to take, given where we see things. They hire this So we see a rising trend in inflation, and someone said in the last 20 years we've not seen it as high as this. But I think it's not peculiar to Nigeria. So if you have that kind of situation where globally we are seeing supply disruptions, we're seeing interest rate rising, we're seeing costs increasing. So having a long-term payment plan isn't necessarily in the best interest of the company, of the seller, because over time, by the time you get your final payment, you find it doesn't cover your cost. And so it's actually something that appears to be, so it works against certain objectives. So whereas you want to increase sales and make it easier for people to buy your product, the other side of it is that you're postponing some risk to later. And so we don't want to do that, but where we have to do that, we certainly factor in a certain cost of a time value of money into the payment that you have to make for the homes or for the products that you're buying. So for us, it's about the flexibility around that. It gives us the flexibility to sell to you, and then it gives you the flexibility to pay over time, but you're going to be paying a bit higher. And then you may, in certain cases, be exposed to changes in the price, potential changes in the price of the products you are buying. So we could tell you that, and that's what we're doing for most of the products where people have chosen payment plans now. We have tied it to certain indices that we see out there. That if the dollar rate, for instance, were to breach, the Naira dollar rate were to breach this value, then the price of the product or the price of the products we have subscribed to certainly change to reflect that. Now, it's difficult, it's a difficult thing to do, but I think it's something that we all are seeing across the board. And so it's important, therefore, that if we're to fulfill obligations to our clients, we have to have a means by which we manage our risk in that area. So, Onome, I hope that answers the question.
Yes, thank you so much, sir. I didn't introduce you earlier. Mr. Benson is the CFO of the company and ED as well. Thank you so much for joining us on such short notice, sir.
Thank you.
Another question we have here from an anonymous attendee says, what would you advise a new investor in real estate market with little access to funding? Should they take a loan, or how can a new investor expand in the real estate market? I think I would direct this to Dolapo. What would you advise?
I think that if you're trying to come onto the property ladder for the first time, I wouldn't say you should take a loan right off the bat. Access to financing is actually extremely difficult and extremely expensive. So if you are coming onto the property ladder, I would recommend taking a very easy step, and an easy step is usually land. And thankfully, you can get land opportunities that are relatively affordable, and they do have payment plans that spread out from 12 to 24 months, maybe with an additional premium because of the time that they're giving you to pay. So I definitely think land in high growth areas. I'm a very big fan of Ekme and that region, and I think there's lots of opportunities there at the time. I think the second thing, like I keep saying, and I think personally that's really important, find a good company with good track record, even if they're new, some semblance of structure and long-term management is really important, because if you're buying land, especially in where it's really affordable, you're probably buying a plot of land in a small estate that somebody's marketing. You're partnering with those people till you build your house, till you eventually sell that land for a very long time. So what you don't want to do is go side by side with just anybody. You really need to make sure that even if it's a new company, you're looking for sign of structure, not disorganized, things don't look too funny or one kind. But yeah, I think definitely not financing, just taking a small bite-sized step, and then from there you can progress and progress and progress. And that would be my advice.
Thank you very much. I think also, in addition to investing with a company with good track record, which it's us in this situation, I think I should also mention that we have a lot of low barrier options for our customers, one of which, like was mentioned earlier, is Duo, our rent-to-own scheme, which allows you to pay rent until you can fully own a home, and it's, you know, affordable. So it allows you to own a 2-bedroom flat around the Lekki-Ekpe Expressway that Dolapo has also mentioned, because that's a fast-growing corridor in Lagos State. So this is, you know, an opportunity you might want to look into. I think I'll have the host put in the website so that people can get more information. It's duo.mixedafrica.com. And so what we try to do is always create innovative solutions that allow people to be able to invest or invest in real estate and, you know, close the affordability gap that we oftentimes see. Yes, mortgage rates are going high, but we still have the NHF, the Mixed Flex, which we also do, that allows you to buy at 6%. That's if you're an NHF contributor. So some of these things are solutions that you might want to explore. Of course, if you're in diaspora, you maybe may not be able to access the NHF, but you can definitely access the rent-to-own scheme. I will type in okay, somebody has typed it in, thank you very much. Duo.mixedafrica.com, you might want to get more information on that. Thank you very much. I'll go to the next question. How can I become an agent? Okay. Again, to become an agent for Mixed, we have a partners page, which the link will be put on the site now. It's mixedafrica.com/partners. And you can become an executive sales agent from the diaspora and locally as well, or you can become a third-party agent. There are very many ways by which you can partner with us. We have different opportunities available for people to become real estate agents. So that link will also be typed into, I will ask Tadi to please help with that link. It's mixedafrica.com/partners. My next question: what are the key trends that are going on in the Lagos real estate market that will influence, what are the key trends that are going on in the Lagos real estate market that will influence future real estate valuation? I want to direct this question to Chinwe and then Dolapo. What are the trends that I think you mentioned this in your introduction, trends in real estate that you think will influence real estate valuation?
Are you sure it's not Dolapo that should answer that? Because that's a bit granular. You know, my approach would be more macro. So perhaps you should be the one to respond to that. And then I was
going to have him answer after you, but it's fine. I just didn't want him to answer 2 questions in a row. Okay, so Dolapo.
I want to hear your insights. Let me get the expo.
No, I think you should answer. It's granular.
I think in terms of trends that will influence real estate, what we always look for is big infrastructure projects. And I think those are among many other things, that's one of the major things that can affect pricing. And I think some of the big projects, even if they're not happening right now, the anticipation of them is also leading to a lot of new development and growth. We recently did a project, or actually we are currently doing a project that is tracking land price growth across the entire region, or across the entire states of Lagos. And to do that and to anticipate the growth in new areas, we're highlighting all the major infrastructure projects that are going on. And of course, the biggest ones are really massive road developments, the one from Ekpe down to Eleko, the free zone, of course, the potential new airport, the really big, the massive road development that's ongoing in Ekpe, the road from Ekpe to Ijebu. I mean, we've seen recently, actually, one of my team members says that his family is very, very big in Ijebu. Now, because they've done the road from Ijebu to Ekpe and Ekpe to the free zone, a bunch of them have just decided to move to Ijebu. A bunch of people have also, instead of keeping their staff, free zone staff in Lagos, like the core of Lagos, that's Ikoyi, VI, Lekki, Ikate, etc., and bringing them down to the free zone every day, they've now moved them to Ekpe because the roads are much better. It makes much more sense. So these types of things can really impact development. So I think looking at the infrastructure projects, and of course, the Lekki Corridor Road, even on the other side of Lagos, the anticipation of that train finishing finally, let's hope it actually does, and the new ports that they're saying they want to reinvest in, and in Badagry, all of these things can impact the real estate market. So finding interesting opportunities not necessarily next door. I don't agree with the idea of just buying, when you see something big, just buy next door. You need to think slightly bigger and imagine that, okay, if this project is here, if this refinery is here, or if this massive airport is here, what are the neighborhoods nearby that are really going to benefit, especially the ones that are already structured? So that is, that's how I'll be thinking about real estate trends, looking specifically at the infrastructure, and then letting that guide you, or letting that guide your decision process as to where you want to invest or where you'd like to take a position. I think that's my answer.
Thank you very much. I'm going to run through questions just to add to what Dolapo has said. Again, you want to look at infrastructure. Lakwe Lakes, Lagos New Town, which is our development, is around the Lagos Lekki Expressway. We have put in infrastructure to support a community of about 200,000 people. We're very close to the free trade zone and all of the development that's happening around that area. And we have land and homes for sale. The Lakwe Lakes Golf and Country Estate is one of our communities. We have Beachwood Park, Para Park, and several others. Lagos New Town is a new town, basically, that you want to invest in at this time because it's going to enjoy privileges from ongoing developments in that area. Now that I'm done with marketing, let me continue with questions. And I want to just run through because I think we have just about 15 minutes left. So for people in diaspora who want to invest in Nigeria, but will prefer other regions apart from Lagos, is it possible for them to do that with Mixta? Yes, it is. I'll answer this. We have properties in Abuja, in Port Harcourt, Benin, and even in other countries outside Nigeria. So Senegal, Cote d'Ivoire, Morocco, Tunisia. So yes, you can invest apart in other regions apart from Lagos. Just visit our website or call us on any of our details. We'll put up our contact details at the end of this session. And so you can reach us and we'll talk to you about whatever it is that you need. Right, next question. If one was to invest in real estate in Nigeria, what top cities have the most prospects? I think that Dolapo has mentioned the Lekki Expressway in Lagos a lot, but I will throw this to Yemi and see that, and ask, so coming from customers in the diaspora in the UK there, what areas or cities do you think that people are really interested in investing in at this time?
Well, what areas? It's mostly Lagos, Abuja for obvious reasons, security and the cosmopolitan nature of the cities. I think when you're doing anything outside of those key cities, it's usually strictly emotional in your hometown. So in terms of a store of value, it's usually Lagos, Abuja.
Okay, thank you. So yes, Lagos, Abuja.
Can I add something to
yes,
that?
Please. Yes.
Okay,
please.
so I used to live in Ghana, right? And obviously I'm not a real estate expert, I'm an economist, but I did notice then that areas that had university campuses as well were really regarded as hotspots for real estate investment. So those who plugged into property investments in those areas for rental income, by the way, actually did enjoy the benefits of that. So I just thought to throw that in. There are universities across Nigeria.
Thank you very much. Thank you for that input as well. So next question is from Timi Ajayi, who's asking, as a real estate developer, is it advisable to take a loan to execute a project? I will ask Dolapo this again.
That's fine. Actually, I know, Timi. I think it depends on the project, right? Every single real estate project's financial viability is so different. Taking a loan out for property, it will require some conviction that you're going to get it sold pretty quickly after construction, because the interest rates are quite high and they can be quite inhibitive. So many times what developers try to do is try and fund the project through off-plan sales. This, of course, means that one, you're going to be selling it at a discount, And two, you are also a bit exposed when it comes to market volatility, prices of construction costs, things like that. But I definitely think that if you have the conviction and you can get off takers that maybe can wait till you're finished, or you are sure that you're going to get the offtake once you're completed, then taking a loan might not be as bad because you won't feel the pressure of the interest rates. But it is very, it's expensive. It's an expensive venture to fund with bank financing. So if you can avoid it, I think very well, please do that. But if you can't, make sure that you have the demand to actually support it and pay the loan back as fast as possible, because you really don't want that interest rate eating into your return. It's very expensive.
Okay, thank you very much, Dolapo. On the back of that, I'm just going to ask Yemi that for real estate developers, what would you say is the best way to position yourself in the UK based off of, just to get the customers, the right customers, and to do the right marketing?
Well, I think the first thing is to build a track record, as Dolapo has emphasized over and over again. Even for newcomers in the game, try and build a name, and with the track record, the best salespeople will be people that have bought off you. Infrastructure, like I said earlier, is key, and the maintenance of that development would now enable return business and new buyers to come your way. Even before the advent of all the social media tools and all that, news travel fast within the community. So if you build, you don't have to go large scale immediately. You can start something, deliver on time, deliver on budget, and deliver quality. And we're still looking at the best ways to reach out to people, because people are not watching TV as much as they used to. Not everybody is on the same social media platform. And but the best way to get new buyers is to do it right.
Thank you very much, Yemi, for that. We have just 2 questions left, and then we'll be rounding up. This first question, I think, is very similar to the last question. It talks about how does a startup developer hope to make an impact if he doesn't have financing. So I'm not going to take it, because I feel that between Dolapo and Yemi, that has been exhaustively answered. The next question is, I've applied for the NHF for over 2 years without success. How does Mixta hope to assist its subscribers with whose applications have been delayed? Okay, so this is an operational question. I won't take it here, but I would advise that you please send an email to the email address that is currently being shown. I think that there's a mistake on it. It's sales_diaspora, which is DIASPORA @mixedafrica.com. But our phone numbers are there, our website is there, and our social media pages are there. So you can follow us or ask us questions, and then we'll be sure to answer you. If you have any further inquiries, we'll also be sure to take them. At this
question, sorry.
Yes, please. Yes,
I mean, it's actually on the back of that anonymous question. I don't think there was a name. The NHF is, it's a general question that people say that, oh, it's so hard to get. I've tried.
Mm-hmm.
How does Mixta help to make sure that, I guess, people actually can apply and actually get these loans? How does it work? I think it would be useful for everybody
to have that answer. Okay, so first of all, it's not typically open to Nigerians in diaspora, because ideally you're not, well, you're probably not contributing to NHF except you are. But then in terms of being able to access it, we have a relationship that we try to work with to get it faster. But like I said, it's an operational issue, in which case there's several things, processes that we follow and due processes that we follow. We have had successes with people that have gotten their NHF, especially with our Beachwood Park that was sold out, where a lot of our properties were sold based off of NHF and the mortgage scheme, and people are still paying now. We even have staff who have accessed it as well. So yes, it's a bit difficult, but we have been able to succeed with it. And I can say that we support as best we can. we don't guarantee 100% success because again, it's a government-owned platform and we only can do our best. But I can guarantee that we have had successes on the platform.
Okay, thank you.
Yes, thank you. I hope that answers it. Except, if anybody on the call in management wants to answer, further. Otherwise, I think that's it. Okay, thank you very much. I want to say a very, very big thank you to our guests for joining us today, for taking out time. I know that a lot of people are calling in from different countries and different time zones. So thank you very much. I also want to say a very big and huge thank you to our panelists. We are so grateful that you're able to join us. We have learned from you a lot. And then, just before we round off, I need to mention, first of all, we have our contact details on the screen showing, so please reach out to us. But I need to mention that we are going to be in the UK for the next this month, actually, the Mixtervest, which is the platform that we are currently working on, or by which we are showing this webinar. We'll be in the UK this month on the 27th. We're going to be at the Nigerian Schools Foundation's Culture, which is basically a fun family day, and it promises to be a great event. And we will be there supporting the event planners, and Mixtervest will be there. You can talk to any of our staff members who will be on site at the time. On the 30th as well, we're going to be there at 6 o'clock. We're going to be at the real estate pop-up event at the Kalon Parlour in the UK. After this session, we'll be sharing the calendar with you so you can join us, but you can also follow us on our social media pages, which is on Instagram, Mixtervest and Mixed Africa. And then you can get more information about these events. But if you're in the UK, you don't want to miss us on the 27th and on the 30th. We'll answer all the questions. You can talk to us directly, and you can get all the information that you require at that time. At this juncture, I'm going to say that we have come to the end of the session. Again, I want to say a very big thank you to everybody for joining us, and a very big thank you to our panelists. It's been a very enlightening, very interesting session. We're very glad that you could join us, and we look forward to learning more in subsequent sessions. I hope that when we call on you, you'll again honor our invitation. Thank you so much, Dolapo. Thank you very much, Chinwe. Thank you, Yemi. And just before I go, I would ask that you give us a closing statement, if you don't mind. I know Chinwe had given us her quotes, but I think just a closing statement to summarize, and then we'll close off. I will start with Mr. Yemi Edun. That's person on my screen.
Thank you, Mixter, and I hope it's been fruitful. One last thing, when we talk of reasons why Nigerians buy in the UK, one of the points that keep coming up is, political instability, but it can go both ways. And this increasingly we are now getting aftermath the Russian, the Russian community in the UK, the high-net-worth Russians, all of a sudden, because of the country's invasion of Ukraine, some can't come into the UK again, some can't access their properties. So this is to the diasporans, I've increasingly been having conversation with people that are now considering having at least a property in Nigeria in case something happens and they just become persona non grata in the UK. Nobody saw this coming this time last year. And imagine having a £30 million property and you can't even come into the country, So that would be my last note. Thank you.
Thank you so much, Yemi. Those are words of wisdom. I will go to Dolapo, please, your final words.
Not much from me. I think we've had a really good discussion. Thanks for having me. I will say that we just some marketing for myself, since I've done marketing for myself. Estate Intel does provide market data to help people who are looking to invest in the real estate market. We actually also recently launched a new tool that can just help you get a sense of pricing in multiple African cities. I'll drop the links. But yeah, that is all from me. Thank you so much for having me.
Thank you very much, Dolapo. Please also be sure to send us the link so that when we're sharing with attendees, we can share the links with them as well. Thank you very much. And finally, our powerhouse, please.
Okay, I think I already said something, but let me just say that, you know how we all expect the public sector to adopt fiscal discipline? As individuals, we need to do the same, and taking your investment journey seriously is one way to do that. And I'm also going to throw in a shameless plug. Yeah, everyone on this call should make an attempt to sign up for research products that come out of Coronation Merchant Bank. You would find them interesting. They're sweet, short, and insightful.
Thank you. Thank you so much for that. Thank you again, everyone, for joining us. I hope you've learned. I definitely have. And we look forward to more sessions with you. Thank you again. So have a wonderful day, night, wherever you may be, whatever time you may be, and goodbye.
Thank you.